Hey guys, Akil here, and welcome to another Trading Edge video. If you guys are new, I am a professional Forex trader as well as a trading coach over at tier1trading.com. And this is the Trading Edge. This is a video that Jason Greystone and myself put out on a daily basis to our Tier 1 Trading members. And every once in a while, we try to throw a freebie up on YouTube as well. I have a lot to talk about today and not a lot of time to talk about it because it's the weekend and I want to spend some time with the family. But I want to start off by saying a big thank you for all of the support. Recently, I just launched my first trading podcast called the Trading Coach Podcast. It's available on iTunes. It's available on Stitcher, hopefully very soon on Google Music and Spotify as well. And to be honest with you, I was a little bit unsure how to feel about it. I wasn't very satisfied with how the first 5 episodes came out, but you guys have been leaving really great responses. Everyone has loved it, so it can only get better. I'm excited. Now, with that being said, I have a big favor to ask for you guys, or ask from you guys. I don't do it much, but the last time I asked for a favor, it was in December, and I asked you guys to vote me for most helpful trader on Twitter, and you guys followed through massively, and I ended up gaining that number 4 spot, being voted the 4th most helpful trader on Twitter. I ask for you to let your voice be heard again, and please leave me a review, leave me a rating for this podcast, whether it's on iTunes, Stitcher. It takes a minute. It is a massive help. My goal is to grow this thing into the biggest and best trading podcast out there, and I can only do that with your support. So if you have the time this weekend, if you have the time today, just take a minute or so, head over to iTunes, head over to Stitcher, wherever you're watching it at, and just leave me a quick rating, even if it's just, hey, awesome podcast, can't wait to hear more. I can't put into words how much that helps me out. Now, in today's video, we're going to take a look at the Aussie Canada. This is going to be a follow-up on a few trading ideas that Jason Greystone and myself put out earlier in the week in our previous Trading Edge videos. And then at the very end, I'm going to update you guys on my equity curve and how trading's going and all that fun stuff. So let's head over to the charts. Let's look at the Aussie Canada. But first, I want to give you some perspective of how we initially started looking at this pair a few days ago before the recent Aussie weakness.
Pull back down, giving us a outside return, and then we put in a new high, a new structure high. Okay, so we've got now a bullish trend. Now we are at this previous level of resistance, which will give a trading opportunity to a counter trend trader or a trend continuation trader, depending on what type of trader you are. I'm looking for trend continuation in this instance, so we're looking for bullish trend. Okay, now I'm going to scrub these off and make it even more clearer as we drop down the time frame. So at the moment we've put in a new high, outside return, new high, outside return, right? First place I'm going to be looking for buying this up is a first chance Jason Greystone first chance entry, which is down here. All right. Now, in order to get that, I need price action to push right back down into this zone and then get a double bottom here in this zone on the lower time frame, so on the 60. All right. Failing that, the bigger kill zone is down here, which is going to be too big because I need under 100 pips of risk. So we're talking about 30 pips below this low, which is going to put us down at 77. All right.
Right here on the daily, you can see we're sort of in no man's land. Yes, we have easily cleared our previous structure high, but if we look left, you can see we're running into multiple VS1 levels. We have a VS1 low right here showing us previous structure resistance. We have a VS1 low right here showing us previous structure resistance. We have a VS1 low right here showing us previous structure resistance. So we have levels on levels on levels, right, of potential resistance. Because of that, I don't really have any reason to want to get long, mainly because I can't predict where price action is likely to go next. before running into trouble. And again, it's different than Greystone's look, I believe, but sort of the same, because he's taking the same approach in, I believe, shooting for targets at a retested structure highs and not an extension. That's how you can kind of protect yourself on the back end. But what I would be looking for here, going down to the 60, and actually probably should go down to the 4 hour, either one, is a potential head and shoulders pattern. So you can see we had a nice base right here. We shot up. We retested this level, giving us a left shoulder. We have this right here giving us a head. And you can either look at any of these as being a right shoulder right here with a slanted neckline. If that's the case, you already have kind of the break and close and the retest of the trend line. I'm not a big trend line person personally, so I don't really care about this zone. What I'm looking for is a retest of that neckline right here, and then this being our shoulder. And if we can get a chance to break and close below that level, it'll be a good position to look for a pullback and then a continuation down. At the same time, if you're an advanced pattern formation trader, this should be in the trade floor as well. Now, I know those are only quick clips of the videos, but what's interesting is that you see two different traders analyzing the same chart in really two different types of ways. And if you're new to trading, welcome to trading. Trading isn't based off of everyone sharing the same opinion. In fact, if we all shared the same opinion, the markets would never move, because we'd all be content on leaving price where it's at. So the market moves off of difference of opinions. And even in trading, right, it's mainly told to new traders that, or people that are trying to sell you systems, you have to do this system, you have to trade this way if you want to be successful. And that just isn't the truth. The truth is there are millions of different techniques and strategies that you can use to become a consistently profitable trader. And it doesn't really matter what you use. I advise matching it to your personality. That way you don't make as many psychological mistakes down the road. But it doesn't really matter what you use. What matters is how you use it. And in the clips I just showed you, Jason Greystone and myself, who come from the same tree, right? I was trained by Jason Stapleton. Jason Greystone was trained by me. So we all have the same kind of underlying philosophy on the markets. However, we're looking at two different things on this pair. In Jason Greystone's video, he was looking for a potential trend continuation opportunity, where in my video, we were looking for more of a counter trend reversal type of opportunity. And what's interesting is that the counter trend trading opportunity ended up being the move that completed and pushed price action down to Jason Greystone's trend continuation zone. So you see how it all works together. And in the previous video, I labeled it "Think Like the Other Trader." And I think that's a very important concept that many of you should start doing, or a very important exercise that you should start doing. Even if you're a counter trend trader, try to put yourself in a trend continuation trader's shoes and see what they would think. It's going to help massively with projections for targets and even stop placement as well. But let's continue up on this, because we have moved down. The head and shoulders work perfectly, by the way. And we have moved down into that bigger kill zone that Jason Greystone mentioned a few videos ago. And I want to follow up and talk about how we can kind of minimize that kill zone, because as you saw, it starts off pretty big. So here's what I'm looking at. Our initial kill zone, we adjust the microphone, get a swig of my Perrier, right? The fancy people water. So fancy. All right, so let's take a look at this Aussie Canada again, excuse me. And we're here on the 4 hour chart. And if you remember, our initial kill zone looked like this, right? This is our kill zone for our potential trend continuation zone, right? This is for you guys that took the foundation course, the study on price action. This should be simple for you, right? Previous new structure high, previous outside return, bada boom, bada bing. You should be able to see this in your sleep. This is our potential reversal zone. However, you'll also notice that this potential reversal zone is pretty large, right? We start, burp, gosh, pardon me. Wow, this is live and uncut. I'm embarrassed. We start off at 101.37. We start off at, we end down here at basically $1 flat. So a pretty big potential reversal zone. And what we want to do is we want to minimize this zone. I'm looking at this from a different standpoint. I'm not looking at this from a trend continuation standpoint, just based on the higher time frame analysis that I did. And if you go back and watch the previous Trading Edge video, we talk all about that, how I have no thought that this is likely to continue higher. So my approach is going to be a little bit different from a true trend following or trend continuation trader, meaning I won't be looking for a retest of previous structure highs here. I'll be looking for a short counter trend move, potentially back into this maybe left shoulder. We don't know it yet, but it could be the left shoulder of a head and shoulders pattern. So I need to narrow down this zone a little bit further than your typical trend continuation trader, mainly because my target projection isn't going to be as big. So this big zone isn't going to work for me. So how can I narrow this down? Well, I'm going to bring on the help of some Fibonacci's. If you take a look at our last move, right? This was our last equal measured move. We call this an AB equals CD pattern, or a 1-to-1 measured move. And basically that is when one wave of the market, one extension is the equal length of the previous extension. A good place to look for counter trend trading opportunities. And what I want to do here is I want to take my Fibonacci retracement tool and I want to drag it from our A leg, right? So our start to our finish, our A leg to our D leg. And we'll see that we're going to get some Fibonacci's. We have a 3D2 Fibonacci retracement that's already been penetrated. We have a 50% down here, and then we have a 618 right at these previous structure lows. Now, if I zoom out and take a little bit of a bigger picture view of the higher trend, and this would be easier seen on the daily as well, I also want to take a Fibonacci retracement from this bigger swing. So our swing low to our swing high down here, or up here. And you'll see that I have a 3D2 right in that level, and a 3D2 is one of the more powerful Fibonacci's. Now, technically, I should have mentioned this before, I treat it like Fibonacci. Technically, the 50% retracement in here isn't a Fibonacci number, right? The Fibonacci ratios or whatever like that. But it is a psychological number, the halfway point of a move, which is why I keep it on the charts. But you can see that I've got a little bit of what I call Fibonacci confluence here, where I have two of these levels lining up near each other. And what is also interesting about this level is Fibonacci aside, let me go ahead and just clean this up for you a little bit. Let's get rid of our 382, 886, 786, boom. And the bigger one, let's get rid of our everything. We can keep the 50% on there. Now let's get rid of everything, whatever. Boom. There we go. Cleaner charts. That looks, no, I don't want to save that. Looks a lot better. We'll get rid of the smaller 618. Boom, there we go. Now, what's interesting about this level is even before throwing the Fibonacci's on there, this was a level that I was interested, mainly because not only is it the midpoint of our level here, but this is a level that price has reacted to multiple times in the past. And here's what I mean. If we take a look at our yellow line, we just scroll back a little bit, right? You're going to see that our yellow line here comes at a level of previous structure, a level that was respected multiple times in the past. You can see support right here, support, resistance, resistance. But even recently, right, a previous structure shelf, right, previous structure high right here landed right on that line. And then as we go in, you can see that price action came here. Draw my little arrow tools in. We came here, we found a little bit of resistance and then ended up breaking through. Resistance then turned to support, right? Once resistance is broken, it then becomes potential support. Once potential support is broken, it then becomes potential resistance. We found support held. Price tried to rally up. We came back down, broke below that level. You can see we fought here again, broke below that level, right? So previous support once again became resistance, came back up, fought it off, finally broke through again. So this level has been respected in the past. So if price action comes down to this level, not a bad place to start looking for that counter trend trading opportunity. And what that allows me to do is it allows me to shrink my kill zone from here all the way to about there. And it makes it a lot easier for me to find trading opportunities. So if we're looking for trading opportunities for the week ahead, this is the zone, right? Basically $1.07, let's call it $1.07 to about $1 flat. Right, 10076 to about $1 even, let's just call it. That's going to be our potential reversal zone for our trading opportunity. Now, how you trade this opportunity, that's going to be up to you. Again, if you're a counter trend trader, this is the approach I'll be taking. I'll only be looking for a retest of previous structure highs, so a maximum retest of this level up here. So if we look at our risk reward, we can kind of set it up. We know where our potential reward is going to be, right? We have an idea, if we're taking an aggressive approach, where our risk is going to be. It kind of gives us an idea of where we need to look for our entry reason at. And of course, if we use a more conservative entry, we can even chop that up a little bit more. If you're a trend trader, well, your targets are probably going to be a lot higher looking up here. So you're going to have a much bigger zone to play stops or a much higher entry as well. And this is all going to go back to what type of trader are you and how you like to look for your trading opportunities, as far as, are you super aggressive, are you super conservative, and are you somewhere in the middle? And that's very important to figure out as a trader, because again, you want to mix that with your personality, because when you're doing something that is against how you naturally feel, unless you're very, 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 very disciplined, you're typically going to second guess yourself. When you second guess yourself, you're going to make mistakes when the market doesn't do what you want it to do. And when you make mistakes, you're going to sabotage your trading. As you sabotage your trading, you're going to slowly bleed your account. As you slowly bleed your account, you will eventually go broke. As you go broke, well, I don't think we need to take it any further than that. Now, if you are more of a trend continuation trader, here's what I want you to do. This is going to be for you guys that are in the course. I know you're new. If you head over to our course, let me just load it up real quick. Give me a second here. If you head over to our course, what I want you to do is go to, not live trading room, go to knowledge base here and click the mastery course. Now, of course, I always recommend that you go through these courses in order, and you don't want to just go straight to the trading strategies, because if you, again, the whole point of the first two courses were to build a foundation, then you can build whatever house or building you want off of that. If you go straight to the trading strategies and you don't know the foundational elements of technical analysis, you're not really going to be able to execute them that well. But once you have that foundational knowledge, go over to our mastery section, right? Advanced strategies to give you an edge, and go down to module 4. It's going to be the Greystone trend continuation trade. And he's going to talk about, obviously, the theory of how he trades trend continuation, but also different entry techniques. So your first chance entry, your second chance reversal, your conservative entry, and then get an idea of what type fits your personality. Where do you feel most comfortable at? And you can always change as you evolve as a trader. I was super duper conservative. Well, when I first started trading, I was super reckless. And then once I got good, I was very conservative. And now I'm slowly becoming more aggressive. So, you can always change over time, but you do need a starting point to start at. And I recommend watching all three of these just to kind of figure out, hey, which one am I most comfortable with? Now, let's talk about the equity curve. It was a good trading week, very, very slow trading week. By the way, coming up next week, we probably should talk about this. Wednesday's a big day. Wednesday is the interest rate hike decision for the US dollar. And this has kind of been the talk of that, along with the interest rate hikes, along with the trade tariffs. That's one of the reasons we see Aussie weakness, right? Aussie is a big exporter, and this trade war is not very good for them, along with other countries. But the main news for this week is going to be our FOMC statement and our federal fund rate, where there's an expected hike. Now, this hike has already been priced into the market. So what that means is, I wouldn't try to play this and say, okay, well, we know interest rate hikes are good for the currency. As soon as they do an interest rate hike, I'm going to try and buy dollars, right? The move has already been made, right? The market is looking for what's next. So any type of really the statement, the press conference talking about when the next hike may come, how soon, any just indication of hawkishness or dovishness. So I would stay away from the markets. That's what I'll be doing, but expect a potentially slow week, as no one's really going to want to show their hand before this news event. And really, that's how this past week was as well. I only took 3 trades. It's been a slow week. Went 2 for 3 and made some good pips. So you can see the equity curve in front of you. It's not sexy, as I say each and every week, but it's slowly moving in the right direction. And when you can slowly move in the right direction over time, you're going to get a slow, boring, consistent, and very profitable result. Aside from that, just some self-reflection. I am hitting at a higher rate than I'm used to. I'm typically about a 55% trader. Right now, I'm hitting at about 65%. So in my mind, I'm expecting some type of drawdown. It's not a negative way of thinking. It's not, I'm not being a pessimist. I'm not hoping it comes. I'll keep winning as much as I can. But I know myself as a trader. I know what my strategy and my system produces. I'm just hitting a little bit more than I usually am. So I would expect some type of, I would expect to revert to the mean at some point. So I'm preparing mentally for a drawdown, and it's good to mentally prepare. That way, when it comes, I'm not flipping out and going crazy. I'm kind of just saying, oh, that was expected, and it's going to help me work through it. Now, if it never comes, I'll be perfect. But, over the years, again, I kind of know myself as a trader. March is the month. It's going to be the end of a quarter in March, so it is time when I do kind of a quarterly review. There is one thing that's on my radar. My target twos aren't hitting at, my target twos aren't providing me what they should be yet. Now, it's not a red flag, right? My target twos are basically producing the same thing as my target ones, and that's kind of how I measure whether it's more efficient to do one target or two targets. So it's not a red flag yet. And I have one trade that's still on the board that could be a home run trade. I haven't really had too many home run trades yet, and those are typically my targets are pretty small, but every once in a while I'll let one ride and hold it for days and weeks, and it could bring me like 400 pips or whatnot. Try to get about 2 or 3 of those a year. So I haven't had one yet, and one of those, dollar yen is one that's on the board. One of those can make a massive difference. So it's not time to panic, but I am keeping track of how these target twos perform, especially as we get, I don't want to call it low volatility in the markets, but not as much opportunity. Let's call it that. But definitely not a red flag yet, just something to keep notes on and make sure I pay attention to it for the next quarter. So that's it. I'm going to produce this video again. Do me a favor, check out the podcast, guys. I think it's going to be fun. I am going to pay attention on Facebook and Twitter. I'm going to do a live version of the podcast probably Tuesday. Now, new episodes come out every Monday and Thursday, so keep checking for that. If you're subscribed, you're going to hear about them before they actually become searchable on iTunes or whatnot. But I do plan on doing a live one on Facebook Live and Periscope just to generate some discussion. I think it'll be fun. So just keep your eyes out on social media for that. I'm not 100% sure of that, but if I do, I'll let you know at least like a day in advance. But that would be this Tuesday, probably 11, 12 o'clock Eastern time. But yeah, head over there. Again, a review means a lot to me. It takes a few minutes. I want to be the best trading podcast out there. I want to have the best trading podcast out there. It really means a lot to me. I'm a competitor. I like to win at everything. And this is something that I want to win at very, very, very badly. So help me out here. And I'll see you guys, Tier 1 members, I'll see you guys tomorrow for our Q&A session. YouTube members, I'll see you guys next time I put up a video. Probably won't be next weekend because I'm busy, but maybe I'll pop by and do something midweek. Until then, plan your trade your plan. Take care. You guys enjoy the rest of your weekend. All right, guys, one more announcement to make. I got a good trading buddy of mine, David FLOYD. He's hosting a get-together, a little bit of a meetup on April 7th. Now, he's located on the west coast of the United States. So if you're out in the Northern California, San Francisco area, and you've got some spare time, I recommend checking him out. Go grab a coffee, ask some questions. There are very few people that I can vouch for in this industry, but David is a person that not only do I like as a person, we've had some very good conversations about general philosophy on the markets and philosophy of education and sharing knowledge. But he's a pretty darn good trader as well. I watch a lot of his videos over on Real Vision, as well as attend a lot of his seminars because we have kind of like-minded views on the market, even though we're different type of traders. So if you're out there and you have the chance, check it out. I wish I can get to one of his events. Each year he invites me to a few of his get-togethers, and unfortunately, my schedule is pretty hectic. I'm basically booked from August till May each year. So the window of free time is very, very small. But hopefully one day I can get out and chat with him in person, as well as attend one of his live events. But if you're out there, check it out. I guarantee it's going to be a good use of your time. And let me know how it is.